Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, making professional trading simple. Getting this video out a little bit late, but had a wonderful talk with a gentleman named Dave. Dave, it was nice chatting with you today. Hopefully, we can hook up again soon. The markets moved sideways, just flat sideways. And for those of you that follow me, you know that these sideways action days, unless they're really big moves up and down and then they just happen to finish flat, are really nothing I like to trade. This type of action here, this little choppy action here, I really the low was 97.03, high of 90. It was like 85 points all day long. That's nothing on the Dow, and this is a really good day to get your hand slapped. So unless you really know what you're doing, I never recommend that people try to play these types of markets because it's very, very difficult to come out positive in this type of a move. However, on the flip side, when you see this type of sideways chop consolidation, that typically means there's a bigger move on the way. So bad from the standpoint of I didn't make any money today, but good from the standpoint of if you can sit on your hands and you're patient and wait for the bigger move, there's really good opportunities potentially in the next couple days or so. So we've seen this on the Dow drop below this channel, come down to the 50-day moving average. Now it is consolidating sideways right here, waiting for the next larger move. Will it be up? Will it be down? We don't know yet. I really think it's contingent on the Fed talking tomorrow. I think the Fed comes out and talks about interest rates, and that while I hate the news and I hate listening to the news for the most part, this is some news that can truly move the markets. When Bernanke speaks, he is one person, or whoever the Fed is at the time, that can actually make the markets move. I will tell you up front that I don't typically like to play Fed talks. I don't mind catching things in the morning. If you can catch a big move in the morning, which is typically how the day goes, when the Fed's going to talk, typically in the morning, there's a big move one direction or another, and then about 2 hours before he speaks, it absolutely flatlines until they talk. Then I usually wait a good hour afterwards before I make a move in the markets because it's not uncommon to see a little fake out where they'll start to move the markets up, suck everybody in. It's been a half an hour or so of trading. Everybody thinks, oh, yeah, plenty of time. And then all of a sudden, pow, it goes the other way. And maybe tomorrow it's the opposite. Maybe it falls and we get back down into that 9600 area I was telling you guys about. And then, with a half an hour left before trading, the thing just turns around and goes absolutely north for the entire half an hour. I don't know how it's going to turn out. I'm just telling you that I typically don't hold when over the Fed speaking. I may hold all the way up to when the Fed speaks, but I don't hold over the Fed talking. NDX on a 60-minute. Now look what we're starting to see here, and that's a break of a lot of these falling wedges. And you can see this happened here. Once it did break and closed above this upper trend line, that was a good defensible long play. Uh, Overall, though, it would have made you a whopping maybe 7 points on the NASDAQ by the end of the day. But this is actually bullish behavior. We now have a break of this falling trend line. And if this continues up, I would look at first resistance at this 1690-ish area coming up here. This falling wedge has been broken, I think, on all of the indices as well, and not just the Nasdaq, but also the S&P and the Dow. We'll look at the S&P in just a second. But you can see here where we did find support right back here at this big fat green line that I had mentioned before, and now we're seeing a small move up in the markets today of 7 points, 6 points. Really nothing to scream and shout about. But the fact that this support held is good for the bulls. At least it's lending itself to maybe a bounce here. Then, of course, on a daily pattern, you're looking at the 50-day and then up here at the 20-day for your next lines of resistance. NDX on a weekly, it's only Tuesday, so I don't really care at this point. SPX on a 60-minute, you can see here we broke that falling wedge. That's bullish. If you caught it right above this break here, you were able to snatch up a whopping 5 points or so before the end of the day, which actually isn't too bad in the grand scheme of things. That's not too bad of a move, at least, especially on a day like today where things basically went sideways and we finished 2.5 points up. Overall, a big move of 13 points from high to low. Ugh, just Not very good trading. Looking at overhead resistance right here at the 1047, 1048-ish area, which coincides with this upper trend line and this previous line of resistance. So you want to be watching that moving forward. Otherwise, as I mentioned before, a lot of times these things will break this trend line, move for a while, turn around, and come back down to retest this upper trend line again. Doesn't always happen, so it may or may not happen here. But if we do find a lot of resistance here, and we see a hard move to the downside after the Fed talk, or maybe in the morning, or whatever it happens, this would be a big line of support if it ever got back down here and touched this line again. So we'll watch that going forward as well over the next day or so. SPX on a daily, right back down to the big fat green line, just like we saw on the NASDAQ, with a little bounce here, coming back up to previous overhead resistance around the 1050-ish area. 1052 is the 50-day moving average. So as I said, I really was kind of looking for a move to 1020. Didn't see it here, but that's okay. This move to 1030 is far enough down for me. We could still see one more push to the downside, still one more push to the upside. The market is really in a very, it's just really in a sideways chop type of an action, type of a motion right now. I even mentioned over the weekend that, we'll probably see a lot of chop during the first couple days, and you may just want to stay out of it. And that's pretty much what we've seen. Just a lot of chop the first couple days. So we're still waiting for a move. What I'm ultimately saying is I don't have any direction on the market right now because the charts haven't told me anything. They haven't given me any direction on the market. Ultimately, I'd like to see a push up over 1052. I think that's a very defensible long, or below 1028 or so area. That would be a very defensible short. So watch those areas going forward. SPX on a weekly. It's Tuesday, but right now we're still holding below this previous resistance. We'll see where that's at the end of the week. VIX on a daily, another move down, 3%, down about a point here. So that should help anybody that's interested in options. As this thing starts to pull back, those option prices start to come back down again and might offer some opportunities to get back into some option plays at a cheaper price. VIX on a weekly. It's only Tuesday, but here you can see maybe a little pullback. Maybe we see this 20-day moving average at 25.45 area before the week's over with. Once again, I'll worry more about that come Thursday, Friday. We have a better picture. Apple on a 6